Welcome. Today, we're going to break down what's really happening with India's multi-trillion-dollar opportunity. We're going to look at the data that shows how its economy isn't just growing, it's actually accelerating, and we'll dig into what that means for wealth creation in the years to come.
Welcome to Ninja Moku, where disciplined price action meets time-based market intelligence. To really get a handle on where India's economy is headed, you have to look at the speed of its journey. This isn't just about looking at past growth. It's about understanding the compounding momentum that's setting the stage for what could be a truly unprecedented economic expansion. So let's get right into the specifics.
All right, first things first, let's talk about the foundation. How exactly did India build a $4 trillion economy? Well, the answer really lies in the powerful math of compounding growth, especially over the last 17 years.
Okay, take a look at this timeline. The really critical insight here is the acceleration. Think about it. After taking 60 years to hit its first $1 trillion GDP back in 2008, the next $2 trillion milestones each took 7 years. But that leap from 3 to 4 trillion, that happened in just 3 years. This timeline just makes it crystal clear that the pace of economic expansion is compressing in a big way.
So that $4 trillion mark, it's not the finish line, not even close. It's the launch pad. It represents the critical mass needed for the next phase of what we see as exponential growth.
And that brings us to what's next. The key insight here isn't really about the $4 trillion that have already been achieved, it's about the potential $12 trillion in additional wealth that's now on the horizon.
This quote from Professor John Edmonds frames the potential perfectly. There is no absolute upper limit to financial wealth. We often think of wealth as being tied to physical things, to real output. But in today's economy, financial wealth can expand at a pace that physical production just can't match. And that really opens up a whole new way of thinking about the scale of this opportunity.
So, what's the engine behind all this? A key driver is something called the wealth effect. It's pretty straightforward. As the value of assets like stocks and real estate goes up, people feel more confident and they spend more. That spending then stimulates the economy, which in turn boosts asset values even further. It creates this powerful self-reinforcing cycle. And that's really the primary engine for the growth we're projecting.
This chart right here shows you the result of that cycle in action. Just like India's economy quadrupled over the last 17 years, our analysis projects it's set to quadruple again over the next 17, going from $4 trillion to $16 trillion. So let's be clear, what we're really analyzing here is a $12 trillion additional opportunity. That's the key takeaway.
Okay, so a $16 trillion economy. That's a massive rising tide, right? But it's not going to lift all boats equally. The next logical step, then, is to pinpoint the sectors that have the strongest tailwinds pushing them forward.
Our analysis points to 4 key areas that look poised for some pretty significant expansion. First up, you have financials and capital markets. They're essential for funding all this growth. Then you've got consumer discretionaries, things like cars and durable goods, because rising incomes are just going to unlock a ton of new demand. And finally, you have healthcare and realty, 2 sectors that benefit directly when people have more disposable income and more wealth. And this shift is all about a fundamental change in how people spend their money. See, as a country gets wealthier, spending on basic necessities, food, essentials, it starts to level off. The real explosion in growth happens in those discretionary areas. We're talking about the things people want, not just what they need. Think cars, premium goods, financial services, and of course, better homes.
All right, so let's drill down even further, right to the company level. Within these high-growth sectors, what are the specific traits we should be looking for? What identifies the businesses that are best positioned to become long-term compounders of wealth?
When you analyze the big winners from the past, a really clear pattern starts to emerge. 3 traits in particular stand out. First, they're almost always market leaders, with the scale to not just survive but to thrive. Second, they're typically consumer-facing, which gives them stable and predictable demand. And third, they demonstrate a consistently high return on equity, which is just proof that they can turn capital into profit very, very efficiently.
So all of this leaves us with one critical question. We have a clear framework now, right? We understand the huge macroeconomic shift, we've identified the key sectors, and we know the traits of potential compounding companies. The question is, where will the next generation of wealth creators actually emerge? Well, it's very likely they'll be found right at the intersection of all these powerful forces.
This insight is powered by Ninja Moku.